All right, good guys. So right now we're looking at the 10 versus 2 year right now on the Fred website. So right now you can see that anytime the yield inverts, we shortly have a recession after. So you can see right here in 2029 the we inverted slightly and then had that recession when COVID hit and everything. And currently the yield has inverted extreme, like we are in a serious inversion of the yield. And so what we can maybe anticipate, not right now, but when the yield actually gets back above the inversion, is normally when the market crashes even further. And the reason why I'm saying this is because this is something that we need to take stock of and actually pay attention to. So I've actually have the yield curve over here on the S&P 500. So the S&P 500 is the orange and the yield curve is the blue, and this red line is, for us to see when it inverts. So it's at 0, right? So you can see every time, and I've marked off these lines here when the yield inverted. So this is when we had the inversion right here. And then after we came out of the yield inverting, so you can see after we came out here, the price of the S&P stocks and everything went down exponentially. Well, not exponentially, but just had a massive bear market. And same thing over here is that when we inverted, when we had the inversion over here, right in this area where the yield inverted, there wasn't the price of the S&P 500, the value of it kept increasing. But once we actually uninverted over here and then rallied up with the yield, then that's when the S&P 500 took a dive, right? So the reason why I'm showing this is because currently where we're at is we have the yield curve. We're in an inversion. This is a steep inversion. It doesn't mean right now we're going to actually have a recession or anything like this. It could be 2 or 3 years from this video, but this is something that we need to be paying attention to. And the fact that if the yield once the yield comes and breaks out to the upside, the price of assets, the stock market, will definitely have an impact. And this is just off the history of every time the yield has inverted, right? So this is 2000, the dot-com bubble. This is 2008, the housing crisis. And then we had the yield invert here in 2019, and then you can see that the S&P had a crazy drop shortly thereafter, and then right now we are, you can see now price is going up, but once the yield does come out of this inversion, we could definitely have a market correction. So that could be 2 years from now, 2-3 years from now, especially how steep the yield has inverted. But once it does come out of the inversion, we could have a serious correction, right? So this is not to spook you about right now. It's just to let you know that in the future there is a higher possibility as the yield does uninvert for stock prices and assets to come down, right? So just keep that in mind as you are trading and investing into the market. All right. So also tomorrow, what we also need to pay attention to is tomorrow we do have a FOMC economic projection. So this is tomorrow at 2 p.m. And actually what we're anticipating is that the Fed is going to increase interest rates. And if that does happen, when it does happen, that's going to if we increase interest rates, the opportunity to borrow is going to be even harder. Not just that, property people who have bought properties, a lot of them who may not have 50% down, or put less than 20% down and are struggling and are on fixed job incomes, they may be feeling it a bit more, especially when it comes to refinancing, right? So you always want to keep in mind that a term, an amortization is for the potential length of the mortgage, but the term is just for a 3 to 5 year, maybe 15-year period of when you get that mortgage. And many times, especially in Canada, it's only a 5-year term. So you want to be cognizant of that. Even though you got your house at a 2 or 3% interest rate 2 years ago, when it's time to refinance, you have to refinance at the rate that's currently offered, and that rate would be what it is now. You don't stay at that 2% interest rate, right? So keep that in mind as you're getting into the real estate market, you're getting into any markets. It's just understand that, make sure you actually have built up the person you want to become, and you're doing what you like in the world. Because if you trap yourself in a mortgage, then you really can't get another job or start something else, because you're always going to be fearful of, okay, well, what if I can't make this income on my own, and if I can't, then I can't refinance. If I can't refinance, I don't have shelter, and so on and so forth, right? So be cognizant of that, and really understand that buy when you're ready. You don't need to rush into it, because if you rush into purchasing any type of asset, you're really gonna feel it on the back end. It's never, how society works is they try to hype you up into everything. You're ready to do this, you're ready to do that, and they try to hype you up into everything. And really what it is, all it is a trap. You're trying to build a real estate portfolio and do everything that you're trying to do, and then all of a sudden, boom, rates increase, everything's increased. You may be over leveraged, I don't know, but just take everything one step at a time and do not rush. As long as you have a clear path of where you're trying to go, you do not need to rush the process. You just keep going, keep maintaining and growing, and grow your skill and who you're trying to become, because that is what's the most important thing. The world is abundant, and there's infinite ways to actually generate income and provide value, but it does take time for you to build value within yourself before you go out there into the world, and then share the value, right? So the hardest part is actually building that skill and that value. That could take 3 to 5 years, but once you got that down packed, the world is yours. So just FOMC projections tomorrow, we're looking for an increase. So if we're looking for an increase in interest rates, we're going to see how gold is actually looking right now on the charts. So let's look at the gold price right now. It's just taking a little. Okay, so let's look at the gold chart. Let's take this off. Take off the S&P. So right now we have gold. Currently we're on the daily time frame. So we currently have gold. If we look at it, we currently have gold in a, so it's in an uptrend. So we're currently in an uptrend. So if interest rates are going to be rising, I would anticipate gold to actually be making a move up, right? So that's definitely where I would be looking for trades, just because when interest rates do rise, I might spook the market, and people may want to actually get and invested into gold, because gold is a safe haven. So what we're looking for tomorrow, I'm going to be looking to probably take that take a long on gold, right? So yeah, so this is the daily time frame. Let's look at the 4 hour. Yeah, even now gold's looking good. Yeah, gold's looking pretty good to long. We're at a resistance area right now, right? And support and resistances are areas, right? So they're areas. So if I'm drawing a 4 hour resistance or support, I'm gonna look at the 1 hour and 30 minutes to see how the candles are operating in that area to decide if I'm gonna take a short or a long. So once the candles get to that area, candlesticks get to that area, then I will decide, am I gonna take a short or am I gonna take a long, right? So right now we're at a resistance. So let's see if gold, so if gold pushes up and then we have a retest and then we head higher, you know, we could take that trade, take that long. But right now you can't really take a long or a short. I think if you took a long or a short right now, you kind of just be gambling with that position. So yeah, so gold right now, we will be looking for longs. The price has been moving higher. We've been making higher lows. So it is looking pretty strong. So tomorrow, look out for a video on how we were able to capitalize on a gold long in the market, right? So the S&P 500 today is looking strong. Nothing too much has changed on a day-to-day. Right, so like I said, guys, all we're just waiting for the price again to go into price discovery. When price discovery happens, all assets, real estate, crypto, everything's gonna go crazy. And don't let it deter you. I don't know where you are in your life. If you can't afford assets or you can't afford assets, it doesn't matter. All that matters is the number one asset is yourself. Invest in yourself. You know, it doesn't matter if you have $1, $100 in your bank account, $1 million in your bank account. All that matters is what you have. Because let's say you have $1 million in your bank account, okay? You go and buy an investment property, but you don't know anything. You don't have any skills. You don't have anything. You know, $1 million can disappear very fast. You know, it can disappear very fast. I'm not saying it's not a lot of money. I'm not saying it is a lot of money. All I'm saying is that you can lose $1 million extremely fast, but if you have a skill set, you can make it back just as fast. You know, you can make back that $1 million very fast as well if you have a skill set that can actually, you know, generate you income and can bring value into the world. So we're gonna go through this price discovery again, blue sky again, within the next 1 to 2 years. So don't be discouraged. When it does happen, control your emotions. There's gonna be 12-year-olds making $1 million, and you're 30, and you're gonna feel like, oh man, how did I miss this, right? But don't worry about it. It's supposed to make the system is supposed to make you feel like that, because then it takes you away from you accessing who you are as a person, because then you start watching everything else, right? So within the next 2 years, get emotionally intelligent. Understand that this is a cycle. These things are happen every 4 or 5 years. And don't be discouraged. Keep learning, keep progressing, and eventually you'll get to the other side. And understand life happens for you, not to you. All right? So enjoy the rest of your day. Any cryptocurrencies, stocks, commodities, anything about the market that you would like to understand, please feel free to message or comment below in the comments, and I will get right to analyzing anything you would like. All right? Thank you. Take care.